What difference is more time going to make for Paramount at this point?
Well, they need a lot more than 7% of Warner Brothers Discovery shareholders to have tendered the vote. And that's all they've got since January the 21st, which is an extended deadline on already the 8th that we were working towards. And now they've given themselves even more time until April is basically when Netflix hopes that Warner Brothers Discovery shareholders would have approved their own offer. But everyone, including Bloomberg Intelligence, have written, unless Paramount come back with at least $32 as an entry point, maybe $34 to really get this across the line, the board's not going to take this seriously. At the moment, it's not any more appealing than a Netflix all-cash deal that's currently going on. And indeed, we know that David Ellison has gone for the jugular here, and it's getting very hostile in its nature. So he's got a lot of work to do. Many investors out there just not willing to tender their offer until they perhaps see more money.
So, and then Netflix is all cash plus the cable assets, whatever that brings
off,
in, right?
Maybe up to $6 in value is what the investment banks
so
think.
27 and 6, $33. Paramount has to beat that. And I think the idea is, for a long time I thought, wow, Larry Ellison is so rich. Sometimes he's the second richest. Sometimes he's the richest man in the world, depending on fluctuations of Tesla and Oracle stock. But they're just so stretched with the offer as it is what I'm understanding from Geetha Ranganathan at Bloomberg Intelligence. They're so leveraged with the deal as it is that they just can't really go any further. Is that the idea?
I think many are wondering why they can't just dip more into the purse strings of Daddy Ellison and use a little bit more of his now overall trust that is unrevocable rather than revocable. But I think there's also just the strength and the firepower of Netflix. You put that into direct competition, Netflix just got awash with cash. I mean, if they the fact that they upped it by that many billions and it's only putting them to 0.5x extra leverage, many just feeling that, of course, this is a company that just has to stop giving buybacks for a little bit.
But I was going to say, the irony of it feels like Netflix shareholders hate this. When they were talking on their earnings about spending more money, not just on their programming slate, but also this acquisition, the shares were sharply lower. So do the shareholders, I guess, see it differently? That sure, you're flush in cash, but we want to leave it that way?
And they want to understand really how this is going to dial up growth. Is really having this much more of a content slate, rather than going to Sony, but really owning and spending this much money, is that going to keep subscribers growing? Is that going to make us more engaged? Look, they had a phenomenal content slate just in the last quarter. And actually, we saw, a 2% increase in the amount that we were all that much more addicted and tiling into their content for the finale of Stranger Things and the next. So what really is that going to be accretive in terms of the overall business model? I think investors are just worrying that they're going to be pushed up in terms of their spending. And where is the bang for the buck more broadly? Are we seeing subscribers increase?
All right. That's pretty much the gist of everything that I was wondering as a shareholder myself and just as a viewer. How much more? What more is this deal going to do for Netflix? I put out a video a couple of weeks ago talking about this merger deal and saying that on the broad scope of things, I didn't think that this would be good for the media landscape as a whole because, one, it gives Netflix way more control over what happens with these catalogs. It gives them way more control over what happens on the Hollywood side of things as far as any projects that are getting worked on or getting produced. Netflix now assumes control over all of that, right? Which can be very dangerous because now we are beholden to Netflix's vision and not the vision of a company that is completely separate and has nothing to do with the ideals or direction of Netflix. That can be very, very dangerous, right? It can be very dangerous taking on and allowing your content and everything that you have in your catalog to be taken over by a company that has a particular vision and direction that may not coincide with the one that you had previously. So I wondered, as a consumer of media, as a watcher of Netflix and of all of these movies and things like that, because I'm a movie buff, I wondered and I questioned what this deal would do on the competitive side of things as well. And outside of that, if you really wanted to know how to capitalize on this particular thing, I gave you in my last video, I gave you 3 different stocks that I think are going to take off or at least stand to take off right, and project numbers that are completely astronomical going forward, depending on where this deal is done, right? Because as Netflix closes in on this merger, make no mistake about it, their shareholders are seeing impact, right? They're seeing impact. And if we go to Netflix right now, look at the last month, you'll see that they're down 8, nearly 9%. And you might be wondering, well, why is that, right? Why is Netflix shares down as opposed to being up? It's because they understand that this all cash buy-in that Netflix is now offering Paramount, this all cash buy-in is going to take a significant hit on the books. They're going to cook the books, you all. Okay, this is the once this deal is done, this is going to show up on the books of Netflix as a massive financial investment. Okay. And a lot of the shareholders are saying, all right, wait a minute, before we invest all of this money and throw all of this money into this deal, what are we really standing to gain from it? On the financial side of things, not even talking about media, on the media landscape side of things, we don't even care about Netflix taking control of the catalog. The shareholders' question is, how can we use this? How is that going to benefit us going forward as far as money? The share price, how is that going to affect us there? How is that going to affect our pocketbooks? How much money we're able to make off of this investment? How will those things be affected? That's the question that everybody is asking. And for that reason, I would not invest into Netflix, not even right now. I would not solely invest into Netflix. Let me say that. I'm not investing solely into Netflix. No. There's a lot of risk there. It can go either way, right? Yes, I understand Netflix has a lot to gain, assuming everything goes according to plan and this deal goes through, the merger is done, and then Netflix has all of this catalog and they have all of these IPs and they have all of this stuff over here to work with, and going forward, it's nothing but green pastures. Yes, then Netflix will explode. But I'm a little bit more conservative than that, you all. My time in the market has taught me to be a little bit more reserved, to have a little bit more patience, and to not just jump out the window when I see a deal pass by. So for that reason, I would not invest solely into Netflix. What I would do is I would invest in one of the companies that I put up in my last video, which is XLC, and I'm going to tell you why. If we go to their holdings, 88, nearly 89% of their holdings are in the communication services sector, which is the exact sector that Netflix is in. And if you drop down, you'll see in the first 5 holdings where this company is directing all of their flow, all of their traffic. Okay. You'll see where they're invested in where they're most heavily invested in the first 5 companies. We got Meta, we got Google, we got Netflix at number 4, and then we have Comcast right behind them at number 5. Netflix, they own over 15 million shares, you all. They own over 15 million shares of Netflix. And here's the kicker. Not only do they own over 15 million shares of Netflix, but you're also getting all of these other great companies in the same basket when you invest into XLC. And on top of that, if we click over to dividends, they have it's not a great dividend, right? I would love for this dividend to be at least over 2%, but that's not what we have. But I will take the 1.3. I will take the 1.13%. So they have a dividend that is there, and given their history, you can see that that dividend has grown, right? It hasn't shot through the roof, but it has been at least steady or growing, okay? You can see there, it's a little all over the place, yes, but that's just because it's the nature of the beast of this company and all of the IPs that they have within this basket of stocks. So I would not personally go all in on Netflix because I'm not comfortable with that. It's me. I am not comfortable going all in on a Netflix investment. What I am comfortable with is going in on a company that has Netflix in their top 5 holdings, but it's also held up and boosted by Google, Meta, Comcast, amongst other companies. So XLC is the company that I would absolutely invest in if I was looking to go heavy into investing in Netflix and their future. This is the company that I would do it. It's a basket of stocks. It's an ETF. It's primed. It has along with those 5 companies in it, it also has Disney, Electronic Arts, Take-Two Interactive. It has Verizon. It has the Warner Brothers Discovery catalog in there. They have over 41,000 shares. It has AT&T, T-Mobile, Omnicom. Listen, this is the company, Fox down there. This is the company that I would absolutely invest in if I was looking to make a heavy investment into Netflix, because one, it gives you exposure to not just Netflix. It gives you exposure to the direct competition. It gives you exposure to Warner Brothers, and it also gives you a dividend. It's not the greatest, best, biggest dividend, but it gives you something. Because listen, to be in my portfolio, I'm charging you rent. That's just me. That's my method. I'm not telling y'all to do the same thing, but I'm telling you, in order to be in my portfolio, you got to pay rent to be here. And that rent comes in the form of dividends. It has to be something there. You have to give me back something other than the promise of future assets gained through stock appreciation. I need that dividend. That is my somewhat guarantee, right? That is my collateral as an investor. That's my entry level. All right. Is that you got to give me back something for my time, my money, and my investment. That's me. So in my opinion, XLC is where I would place my money, and I probably will throw a little bit of money in here because I do see Netflix being on the verge of great things in the future if they do complete this deal, because they're going to be the big dog on the block. But for me, XLC is the way to go, because not only do I get Netflix, but I get a basket of other great companies that are all at the top of their game that will not be dethroned anytime in the near future. Y'all let me know what y'all think about this play. Y'all let me know what y'all think about Netflix and this merger. I would really love to read your comments of what you all think about this down in the comments. Let me know what y'all think about this merger, man. Let me know where y'all see this going on both ends, the financial side and the media side of things, and the landscape going forward. I appreciate you for watching. Drop a comment down below, and I'll see you on the next video. Later, y'all.